Hello, good day. This is the weekly analysis of the GBP/USD pair dated June 4th. Yes. In the past week, the price entered a ranging phase and failed to break the swings in this area. It has only formed a buy-side liquidity here. It is predicted that the price will have a short-term correction toward this weekly volume imbalance area, and after that it will enter a bullish phase to collect the remaining buy-side liquidity. It will gather it here. If it is accompanied by bearish momentum, it could continue the trend. It will continue its bearish trend to collect the internal liquidity here within this weekly fair value gap area. Looking at the RSI, we see that the RSI is currently in a bullish trend and it is expected to enter the overbought zone. If it gets rejected from this area, a correction could occur. However, if it continues its bullish trend and enters the high potential zone, this indicates increased buying pressure and a bullish market, and it could continue its upward trend. By analyzing the daily time frame, we see that the price is in an uptrend. Ultimately, it reacted to the bearish order block here, had a short-term correction down to the daily 1FG zone in this area, and then experienced another upward correction here, which suggests that the price may undergo a short-term correction. It may move downward to collect liquidity, and if it closes within this zone, in this area, we can look for a buy position to the upside and hold a buy bias. In this section of the chart, if it closes below the zone and continues its bearish trend, it is expected to enter this daily order block zone and reach the 50% level of the candle and react there. And after that, in this zone, we can look for a buy position in the market. If the market faces increased buying pressure, it can continue its bullish trend until it enters this zone, the daily FVG and BPR area here, where we can look for a sell position in this range and enter a short-term correction in the market with a pullback. Up to this 4-level time frame, we see that the price reacted to this 4-level FVG zone, had a short-term correction, collected the buy-side liquidity here, continued its downward trend, and finally reacted to this FVG zone, which is currently in a ranging phase, and if the price breaks, it can continue either its downward or upward trend in either direction. Also, by analyzing the 1-hour time frame, we see that the price, as predicted, closed below the swing low. In this section, it continued its downward trend and eventually entered this optimized 4-hour and 1-hour FVG zone. In this part, there was a short-term correction here, and after that, it moved upward. It collected the buy-side liquidity here, continued its downward trend, and eventually formed an ICT candle here. By moving upward, it entered this 1-hour unicorn zone, and after that, there was a short-term correction. Here, it is expected that the price will continue its trend, then continue its downward movement, and in this ICT candle, we can look for a buy position in the market. If it collects the sell-side liquidity here and closes as a candle with a shadow, we can look for a Ryan Soldier strategy in the market. The entry point in this section is with the stop loss behind the swing, and we can set our target based on a 1-to-1 or 1-to-2 risk-reward ratio or the swings here. If the price continues to make lower lows with bearish momentum and we identify weakness in the trend, we can look for a buy position in the market, place the stop loss behind the swing, and set the target at a 1-to-1, 1-to-2 risk-reward ratio or at the swings identified here. Also, with the bullish trend, the price in this section has formed a swing failure pattern strategy for us, which could move upward and react to this BPR zone or the order block area here. The 50% level of the order block is important for us, and if it gets rejected from this area, we can look for a sell position targeting the swing low in this part. Place the stop loss behind the swings and use this opportunity to enter the trade. Wishing you success and profits.